Hello and welcome back. It has been just over 20 hours since we opened our Australian dollar Canadian dollar buy order, and we have a result. The buy order was closed at a profit. And we can see this from the account history tab down here. As you can see, the green indicates that the order was closed at take profit, and this single order brought us $22.74 of real money from the Forex market. So congratulations on that. Right now our account is sitting at a total of $119.20 profit, and as you recall, we started off with simply $500 on the account. So if I bring up the calculator now and we divide $119.20 by 500, we'll see that in total we have earned over 23% of profit just through these three trades. That's an incredible result. It is a result of very precise entries and exits and very well calculated risks. So we'll talk more about that in the summary for this section. And for now, let's just quickly have a look at how this order played out and what we can learn from this particular trade that we conducted yesterday. So as usual, I'm going to drag the order onto the chart so we can see it there, and I'm going to change the chart to a bar chart so we can see things a bit better. And if we go zoom in a little bit, we can see here that the order was opened where the red line is, and that's where we entered the position. Then from there the market went a little bit down, kind of crossed over this channel line, the bottom of the bottom border of the channel. Hit the moving average, crossed it a bit, tested it, and then went back up slowly to where it's supposed to go. So a couple of learnings from this particular example, or from this particular order. First one, and one of the most important ones, is that it's really good that we set the stop loss in this position where we did. And by that I mean that a lot of the time traders tend to set the stop loss right under the channel, right, like right over here or maybe over here. As you can see, in this case it wouldn't have worked. The market tends to test resistance lines and borders of channels, and by that I mean that it can approach them and even go through them a little bit and then go back. So finding a good position for a stop loss is a crucial part of your trading. In this case, I'll remind you that we looked at the psychological level of 95, and that was protecting our stop loss. So we set our stop loss below that level. Also, definitely it has to be below this bottom border of the channel. Another interesting thing about the stop loss is, and this is something I didn't mention yesterday, but it's good to analyze it today. As you can see, the stop loss was also protected by the moving average. So not only the 95, not only the channel border and the 95, 0.95 psychological resistance level were protecting a stop loss, but also the moving average was. And so this is a 96 simple moving average, and 96. There's 24 hours in a day, and if you multiply 24 by 4, you'll get 96. So this moving average kind of represents the average over 4 days, the average on the hourly time frame over 4 days. And as you can see, in this particular case, the moving average works really well. The price bounced off the moving average here, then bounced off the moving average over here again, then bounced off the moving average here again, and yesterday, after we conducted our trade, the price also once again bounced off the moving average. And that's a very good example of how you can use the moving average as a moving or rolling resistance line. So in this case, that was another good thing for where we set our stop loss. And finally, if we look here at the take profit, what happened here is the price has reached the take profit, which is great, but it has not yet reached the top border of the channel. So there is a potential for the price to keep going, and maybe that will happen. But if you recall, the way we set this take profit was it had to be below the important psychological level of 0.96, which is here, which I'm currently showing with the cursor. So this is also a very crucial part of your trading, to set your take profits at strategic levels, like below or above. In this case, we know that the traders will be hesitant to cross the 0.96 line, and therefore statistically it kind of reduces your chances of profit if you set your take profit above this level. So sometimes it is worth being a bit more conservative and setting your take profits below these levels. So being kind of, rather than just going for big bucks, being more strategic about your trading. So those are kind of the learnings from this example, and or from this particular trade. And I look forward to seeing you in the next tutorial. Until then, happy trading.